What's up, you guys? It's Henry. So today we have to have a serious talk about the stock market, why it's tanking yesterday, and a little bit more explanation for my videos on Tesla. I started this channel and I'm fully transparent on what I'm doing and what I hold. In my main portfolio, I have 725 shares of Tesla, and I've been investing at many price points since December and have never sold a share of stock in Tesla yet. I have Tesla in my Roth IRA and M1 Finance account as well. I also have Tesla in the ArcH portfolio that I manage over on Patreon that I threw $10,000 into. So I have a lot of Tesla, to say the least. There's been a lot of comments about Tesla recently, and I don't let negative comments affect me because I know that deep down internally I mean a lot of good and I want to educate you guys, and I actually do really believe in Tesla. So I want to address this issue. I'm pretty sure I'm the luckiest YouTuber because I literally never see bad comments for the most part, aside from after battery day, and that's what I really want to clear up. Not just Tesla stock, but the entire stock market was falling on Wednesday, and I think it's really important to talk about that. There's a lot of people discussing Tesla stock, and regardless what anyone says, here's the real truth, the raw truth behind owning Tesla stock. But before we begin today's video, I would deeply appreciate it if you smash the like button. And yes, I know that I didn't say smash the smash button because, guys, this is a very important conversation. Hitting that like button is for the purpose of helping everyone else on YouTube find this video. The stock market is dropping, and remembering myself as a beginner investor, I would be freaking out if something like this was happening. I would find reasons to sell my shares and never hold that stock ever again. But look at me now. I have 7 years of experience and can confidently tell you guys how the stock market works and what you should be doing in terms of your expectations for investing. Also, later in this video, I really want to address the topic of being wrong in the short term and losing money. Now, if you look at the stock market as a vehicle of creating wealth, it's a competitive game amongst the entire planet of people managing money. The truth is, the game is very competitive and there is no way to time the market. I've said this on my channel, but I'll say it again. Time in the market beats timing the market. Here's an interesting image from a study Charles Schwab did, which is accurate with what I learned in college and Goldman Sachs. This chart shows the range of returns from the S&P 500 from 1926 through 2011. As you can see, in a given 1 year period, stocks had returns as high as 54% and as low as negative 43% in one single year. That gap happens regardless of how good an investor was at research, because the way the market performs is out of an individual's control. Now, if you look at the 3-year chart, you can see that the range is much less, and skipping over to the 20-year period, the stock market has never been down, no matter when you started and stopped during the 20-year period, even though there was wars, there was pandemics, and there was all kinds of really bad stuff happening in the US economy, even the Great Depression. There was never a period within 20 years that the stock market was down. However, do you guys see why a given week or month, regardless of education, skill, or knowledge, even the smartest person cannot control the behavior of the entire stock market, and what it will do if you try to always predict the short term? It is just absolutely not possible. And basically what you guys should know and keep in mind is you should buy and hold stocks for the long term if you want to have the greatest shot at never losing money and growing your wealth. That's because timing the market is impossible, and I'll be completely honest, Warren Buffett, other YouTubers, Wall Street, and we just can't do it. None of us can actually do it. I'm being realistic here because this is my area of expertise, and the information I'm trying to convey is a smart investor shouldn't be so reactive, and the best thing that you should do is invest money for the long term in amazing stocks. The last thing I want to say is the stock market is not the economy, so it's not as simple as selling everything because of some bad piece of news. You see, the stock market and the economy do influence each other, and they are correlated to some extent. But today, because we have government that can print money, other countries that are buying up the US dollar, multi-billion-dollar corporations that actually benefit from small businesses failing, such as Amazon, the relationship is very tricky. The economy can be doing poorly while the stock market is booming. So I will say it again and explain the stock market is not the economy, and I want to explain this very well before we go into Tesla stock. Now, the difference with the economy and stock market is widely showing the disconnection. In the time of the Rona, the stock market couldn't be more divorced from the United States' broader economic situation. Although the S&P 500 tumbled sharply in March as the shutdown affected large swaths of the economy, it had made back all of its losses by the first week of June, or nearly all of its losses, before dipping again and then quickly rebounding to all-time highs just recently. Why? As is usually the case in economics, it's complicated and everyone has a theory. If you include the idea that investors are betting on a quick V-shaped recovery and banking on corporate profits, eventually rebounding in the medium and long term. Some prominent tech companies at the top of the market, such as Amazon, Microsoft, Apple, and Alphabet, actually have reason to think the Rona could shift the business in their favor, with so much emphasis placed on digital shopping, communication, and entertainment. I think the markets are also providing a better place for wealthy people to stash their money than alternatives like bonds or banks. People, particularly the rich, have cut back their spending, so they need a place to park their funds somewhere like the stock market, especially since interest rates are rock bottom at this moment. So that is just a few reasons the economy and the stock market do not reflect each other very well. I can't deny it is pretty hard to watch money go down, and there really isn't anything anyone can change besides popular belief that we can sell a stock and buy it back cheaper. I tried that for 5 years until I just started buying and holding Tesla, Amazon, and Facebook, and stocks that I have researched and believe in have very good long-term perspectives. This isn't an easy video to make because it's the hard truth that there isn't a simple trick that anyone on the internet can suggest that will help you beat the stock market consistently. I do have some ideas from research I have done, and I will share that in next month or two, but for now, I'm talking about simple investing knowledge that applies to most investors that are new or intermediate investors. In fact, a lot of you guys know that I have a finance degree and worked at Goldman Sachs, so I've been in this game for 7 years. The reason I bring up Goldman Sachs is I personally worked on accounts in the excess of $1 billion with A-list celebrities, and here's what I've learned. I'm not allowed to mention names, but I've learned a lot and witnessed the exact conversations between them and their financial advisors. Not only did I listen in and experience these conversations, but I also saw what the portfolios were holding. And let me tell you, there is no rocket science to proper investing. In fact, the simple rules of buy and hold, diversify into different asset classes such as stocks, bonds, and real estate is what the billionaires do, just with a lot more money. Are they timing the market? Not at all. The fundamental rules of being patient and staying the course of investing in assets such as my explanation in this video is exactly what the billionaires do as well. So take out a piece of paper or your notes, and here's a summary of the rules in the stock market that will help you not only make more money long term, but calm you down when things don't go the way that you expect. And then we will talk and take a look at Tesla stock and what Daddy Musk said, which upset some investors in the short term. Number one, don't try to time the market. Invest in businesses you understand and don't mind holding long term. Longer holding periods virtually guarantee returns, but in the short term, nobody, not even the billionaire advisor, can consistently and accurately bet what will happen next. 4, don't let emotions cloud your judgment. Don't let your emotional side just sell the stocks and start thinking short term. That is not a good move. 5, have a diversified portfolio. Cool, got that down for when you feel like I let you down or the market let you down or you just feel like the game is too hard. I believe if you follow these rules and watch my videos, you will be successful. It just takes patience, trust, and the proper mindset, and you can absolutely build wealth long term. Uncle Henry is here to guide you, and I am not promising that I will always be right in the short term, but generally speaking, my long-term bets have been really good, and if you follow my rules, you'll be a very successful investor, and I hope that all my YouTube family members will be taking advice of being more patient and long term. All right, let's wrap up with Tesla. Tesla Battery Day Tuesday revealed a surprising amount of information about projects that the company has kept under wraps. The presentation described changes and improvements to just about every aspect of its battery packs with big picture implications for the claim that Tesla will have a $25,000 vehicle. However, they did say that it'll take about 3 years to accomplish that. Here's why the stock fell, in my opinion, on Wednesday, and now as of Thursday, as I'm filming this, it is rebounding again. There is many reasons that the stock fell after the announcement, but the main one is that there is still a lot of work that Tesla has to do. Investors were just not satisfied that it would take Tesla 3 years to build this $25,000 vehicle, and the battery innovation would be a process. Again, in my opinion, people want fast results without the work, and that's just not how the world works. All good things take time. The innovations could cut battery costs by more than 50% and nearly double the distance the vehicles can travel, opening up Tesla to beat the competition and mass produce even more affordable cars. I think people are silly for selling the stock because it will take Tesla 3 years to do this. Wow, it takes 3 years to improve 50%. Oh my goodness, that is so slow. And make a game-changing battery? No, I can't wait 3 years. So you're telling me if you take 100 people making $100,000 and tell those guys that in 3 years their salary will be 50% higher for a total of $150,000, they would all be upset. I'm betting most of them would be very excited for the big jump in just 3 years, and their salary has grown by 50%. And Tesla is basically doing the same thing with their battery technology, yet Tesla investors are all upset because it's way too slow for them. That actually worries me a little bit because it says a lot more about the investors investing in Tesla and the speculative nature of a lot of these beginning investors that are just starting to invest in Tesla. I'm not sure anyone views it that way, but that probably plays a really big role in Tesla stock. And me personally, I'm eating that up. In fact, if Tesla dropped to like $100 a share, I'm pretty sure all the comment section would blow up and be like, oh my goodness, this is such a bad stock. But also, I would be extremely happy because I would just buy Tesla shares on the cheap and I would continue to invest in Tesla because I think it's such a good investment for the long term. So I stand my ground, and regardless of what Tesla does short term, I'm confidently holding the stock and I'm still investing in it every time I do have money available. Let me know what your guys' thoughts are below. Do you agree that investing in the long term is better than speculating in the short term? Thanks for watching. I hope this video was eye-opening for the folks that might have thought that I was a genie or placed some extremely high hopes that I could predict any stock and always be right on which direction is going to go in the short term. That's just not how the stock market works because it is a random and irrational game in the short term, but a strong voting game in the long term. Don't forget the rules I talked about, and I am so excited to keep making videos and educating you guys. Again, I really hope I cleared up a lot of expectations from you guys because I know sometimes I can be very optimistic, and I am very optimistic about the stock market in general in life because we have a lot to be thankful for, but I also need to do a better job on talking about the risks and what could actually go wrong. I'm pretty sure I do that, but I really wanted to address that again. And there are things that just happen and stocks do just go down in the short term, but if you have a long-term perspective, you really have nothing to worry about. Be aggressive in learning, but be safe in investing. I'll see you back with a video on Microsoft next, and have a fantastic day. Give Uncle Henry that fist bump. Oh, and by the way, if you're still watching this, let me know because I think I'm gonna make my email uncle@investwithhenry.com. If you like that email, do let me know. And I'm gonna be sending all you guys an update on the options course very soon, so do let me know if you like that email, uncle@investwithhenry.com. I think that sounds better than henry@investwithhenry.com, so I think Uncle will be more funny. Anyways, thank you so much. I'll see you very soon.
No one ever sees me.